Hello everyone, this is Joe from DailyCoin. Today we are going to change the concept of our videos. So instead of providing you with a technical analysis, we will give you a series of educational videos so you will be able to start trading in the cryptocurrency industry. So I will provide you with my knowledge and experience in this market, and we will do the basics of tradings. Today's topic is trends. So let's go to the charts to see how we can spot a trend, what are the types of trends, and the disadvantage and advantage of trading these types of movements. We have three different types of trends. We have the uptrend, the downtrend, and something called a neutral trend, where the market is trading inside a channel or a range. So 1, 2, and 3. How to spot an uptrend? First, before talking about how to spot a trend, let's clarify a point here. Whenever you are in an uptrend or a downtrend, the market moves in an impulse correction, and etc. So either you are in an uptrend or a downtrend, we have impulse correction. So how to spot an uptrend? In an uptrend, you can see the market is posting higher highs and higher lows. What are these keywords? If this is a high, this is called a higher high, and this is a higher high. And also in an uptrend, we have higher lows. So if this is a low, this is called higher low. And similarly for this, higher low. This is a way to spot if you are in an uptrend or a downtrend. Here we are in an uptrend, we are seeing higher highs and a higher lows. Also, the impulsive wave is to the upside. So an impulse push the price in the same direction of the main trend here to the upside. However, a correction, this is called a correction, is a slight movement in the opposite direction of the main trend. Impulse correction, impulse correction. So let's go to talk about a downtrend. In a downtrend, we have different, let's say, swing highs and swing lows. Here we have lower lows and lower highs. Okay, if this is a high, this is called a lower high, and similar to this. Here, if this is called a low, we have this as a lower low, and similarly to this. Okay, so search for lower lows and lower highs. And in this downtrend, you can see the impulsive wave is pushing the price to the downside, and the correction is pushing it slightly to the upside before moving to the downside again. Impulse correction, impulse correction. Okay, this is correction, this is called correction here, and this is correction. These are the impulse. So this is the difference between an uptrend and a downtrend. However, in a range, the market is bouncing between two levels. These levels are called support and resistance. You can see that the market is bouncing inside this channel. So the market is not moving neither to the upside nor to the downside. It is stuck between those levels. Now let's go for real live examples. I will start with an uptrend. Here you can see that the market is posting impulse correction, and the impulse is to the upside. That means we are in an uptrend. Also, we have higher highs and higher lows. So this is how you know that you are in an uptrend. Now an example for a downtrend. If we look at this part of the chart here, let me segregate it like this. Okay, we can see that the market is to the downside with a downtrend. Impulse that pushed the price in the same direction of the main trend, correction, impulse, correction, impulse, correction, and etc. So we have lower highs and lower lows. We are clearly in a downtrend. Finally, we have an example for the range or neutral trend. This is an example here where you can see the market is trading inside a range. Okay, the market is neither going to the upside nor to the downside, is bouncing between those two strong levels, which are the resistance and the support. You can use this tool here on TradingView. It's called parallel channel, and apply them on the wicks of the highs and the lows to be able to know that you are in a range or a channel. Also, I will add here, if you need or you would like to make sure that you are in an uptrend, you can link the bottoms like this. I always use the wicks whenever I need to draw anything on the chart, the wicks or tails of the candlestick, you can see. So by linking the bottoms in an uptrend, you can see the direction of the trend. Here I will link, you can link the peaks. By linking the peaks, you can know that you are in a downtrend. The direction is to the downside. Okay, also you can link the bottoms, it's the same. Okay, but at least you can know that the direction is to the downside by linking or either the bottoms or the peaks. And similarly here you can link the bottoms and the peaks, and you can see the direction of the trend. So what are the advantages and disadvantages of trading a trend, either if it is a downtrend or an uptrend? Whenever I say a trend, that means either an uptrend or a downtrend. However, the neutral, it is a range or a channel. So what are the advantages? The advantages is, in a trend you will have a potential to make big gains because the market is posting huge movement, let's say to the upside in case of an uptrend. So there is a potential to make big gains. This is one advantage. Second, the odds is in your favor whenever you trade a trend. Why? Because the momentum is in the same direction of your trading idea. So if you want to trade a trend, you should consider a buy position. So the odds are in your favor, and here we can say that they are 70% is most likely to this trading idea to be a success, since you are trading with the trend. Okay, either if it was an uptrend or a downtrend. So what is now the disadvantage of trading a trend? The disadvantage is it is hard to spot an area to enter or trade a trending market. This is one of the cons to trade the trending market. It is not easy to find an area where to enter the trend. Now let's move to talk about the range, the advantages and disadvantages of range. The advantages or disadvantages of trading a range, we will start with the pros. The pros is it is easy to trade a range since you can just rely on the support and resistance and then execute a buy position here or sell position here, and whenever it will touch, let's say you can put a sell limit here, then you will be in sell order, buy limit here, and then you will be in a buy order. So it is easy to trade a range. It is not as hard as the trending market. But the con of trading the range is, or the disadvantage is, that the profits are limited. You can see that the market is moving inside two levels, so there is not much money to do if you trade the range. So this is it for today's session. We covered what are the types of trends, how to spot them, and what are the disadvantages and advantages of trading them. Next time, we will show you how to spot a reversal and how to benefit from it. Thanks for watching, and see you in another video.